Hi everyone, I'm Ken from Crypto Trading KS. Everything I do for you is free. If you're new, welcome, and welcome back to our regular community. Twice a day, 7 days a week, I share my experience as a full-time crypto trader. My goal is to assist you to be more of a financial blessing to yourself and those you love. Let's run the numbers. Bitcoin is currently trading at $33,311, down 4.11%. Ethereum is currently trading at 2114, down nearly 1%. Stablecoins USDT, DAI, USDT, and BUSD are currently red. That indicates money is flowing from these stablecoins into the crypto market. When they're green, the opposite is happening. In the previous session, we looked at the news for sentiment analysis. We saw 7 positive stories, 1 negative story, and 2 neutral. If we look through here, banned, rejected, guide, struggling, dip, settle. Yes, this one is a kind of a neutral one. Fall over, viable, El Salvador, regulate, struggles. What do we see? There are 8 negative stories. It's an amazing thing. From the previous episode, 1 story, now 8. That's quite a difference. What you'll find is that news reflects current sentiment in the market. It's very normal. It's really important not to be too influenced by the news. I'll explain a little later why that is the case. I had a really interesting question. This was direct message to me. I never reveal the identity of anyone that does a personal message to me. I think this is a great question. How do you diversify your portfolio? To answer that question, we have to understand what fiat money is. You probably heard this term floating around, but sometimes we don't know quite what it means. Fiat money is money by government decree. Government decree is simply willed into existence by an act of parliament or Congress. Let's get to the meat of this question. How do you diversify your portfolio for a person new to crypto among stocks, bonds, gold, crypto, and cash? The important thing to realize here, money is always on fire. It's always getting eroded in terms of purchasing power. That's because the money printers keep on printing it out. Have you noticed $1 today in comparison to the past? Is it worth the same or worth less? For example, if you bought something for $1 10 years ago, could you buy the same thing for $1 now? What this graph shows us is the purchasing power, the ability of you to purchase the same thing with the same money, is decreasing. And that makes a lot of sense. And that's because of inflation. Always remember that money that you hold in your hand, in your bank account, it's on fire. This is literally, it's burning away because of inflation. Now let's go a little bit deeper. If you had money that you would want to put into stocks or bonds or gold or crypto or just leave as cash, what would happen if you had some free cash and you wanted to put it in, for example, a term deposit or a money market fund, just to collect interest? You could get maybe 0.5%, you could get 1%, 2%. Let's say you're incredible and you can get 5%. Now, the return from that is not the real return, because remember, money is on fire. How do we focus on the fire rate, the rate at which money is on fire? We track annual inflation. We track the inflation rate. And there's many studies out there that say inflation is completely understated. But let's not worry about that at the moment. From the latest, May 2021, inflation was running at about 5%. If you made 5%, putting your money somewhere, anywhere, doesn't matter where, but if you made 5% doing that, and the inflation rate was 5%, at the end of the year, how much better off are you in real terms? What do you think? Would you say not better off at all? You're basically in the same position as you started. Whatever you put in is, because it's on fire, when you get it out, the part that's burnt away is burnt away by inflation. The thing that's really cool about crypto is that it is deflationary. There are many coins with fixed supplies. When you have a fixed supply, you can't print more. That means it's deflationary. Deflationary means it's growing. Now, the critical thing, everything is measured in fiat or fake currency, dollars or euros. It doesn't matter. It's just by government decree. If you are buying stocks, they're measured in dollars. Bonds, measured in dollars. Gold, measured in dollars. Crypto is actually measured in dollars until you transfer it into crypto, and then it's measured in terms of that cryptocurrency. So if you were to take $1,000 and buy Ethereum, for example, now you have that equivalent of $1,000 in Ethereum. Or you were to take $1,000 and put it in Bitcoin, you have now $1,000 in Bitcoin. The important thing, crypto is representative of a new technology, which is really, really important. It is the next internet evolution. It's the internet of money. As there is more and more demand, the prices of crypto will naturally increase. As they increase, that money is deflationary. It means it's going up in value. It's literally the inverse of this particular graph. My background is in finance, so portfolio theory was one of the subjects that I studied at university. The thing with portfolio theory is it assumes that there is no such thing as crypto. Crypto is really, really new. So returning to the question, how do you diversify your portfolio? If you understand that your money is on fire, it's on fire in real estate, it's on fire in bank accounts, it's on fire if you hold it in your pocket, it's on fire if you buy bonds, if you buy gold, you buy silver, whatever it is that you buy, it's not on fire when you buy crypto. It's actually growing like a money tree. I hope that helps to answer that question. The first thing that we do each session is use Rule 171 to zoom out. We want to get an overall look at the market. One of the best ways to do that is look at the KSModel, which is a Bitcoin technical trading model based on institutional price psychology. It's important to understand institutional price psychology is very, very different from retail price psychology. I'll just go into that. If you search Medium for the KSModel, just this title here, I always update this to try to cover the fundamental basics. Institutional psychology is incredibly different from retail psychology. Institutions have very long time horizons, like decades. Retail investors are very much focused on hours, days, maybe a year at the most, but it really depends. If your time horizon is longer, you're more institutional in nature. Objectivity, retail investors can get a lot of shifts in optimism and pessimism, primarily because they read the news and take heed of it. Unfortunately, that's not often a good way to go. News can often mislead. Institutional investors look at things like total addressable market. I won't go through this whole article, but I just want to let you know that there's quite a few things that are in here that can help you. So I just wanted to point that out. Returning to the KSModel, the institutions know the price is going up. Why do they know it? Because they crunch the numbers. They understand. They've got a lot of very, very talented quantitative people working for them who look into all the forecasts and economics of things. In the sunlight, they expect the price to go up. and they've set targets. Let's continue. Perhaps one thing before we go to the next is the cycle peak of the previous cycle has never been violated when price reaches a new high in the current cycle. This 30,000, when it happened, I marked it in on around the 13th of May as the bottom of this particular price action. Now, the bottom doesn't mean it's exactly 30,000. It means that there was a negative capitulation move, which is quite common for a blow-off bottom that happens in corrections. That correction, I believe, was basically the taking out of liquidity that has been pumped into all markets. This basically just normalizes the curve in terms of its ascent up. This is the technological adoption curve of crypto. This white line is the internet. This line is crypto. We're effectively around the year 1997 in terms of crypto adoption when we parallel it to the internet. Crypto is growing far more quickly than the internet ever did. It's a real technology. Now let's zoom in using Rule 172. Let's have a look at Bitcoin technical analysis. Last episode I mentioned that if we put in a higher low, for example, this is a low here, this is a low, but it's higher than that one. I'm expecting that we could potentially put in a higher low around here. We've got a lot of structural support at that 32,414 level. Bitcoin is currently trading at 33,222 approximately. It has support below it at 32,869, resistance above at 33,588, and a real key line that we want to hold. We want to get above that 35,000, or at least to that 35,000. I believe that this particular price movement is seeking to attract shorts back into the market. There's still quite a lot of structural support down here that may lead to the shorts being liquidated. Let's have a quick look how the shorts and longs are operating. This is the short curve, and we can see the shorts are actually decreasing in terms of volume. There's a bit of a stalemate going on in the market at the moment. The shorts are basically winning, but there is a bit of an uptick here in long behavior. Let's dig a little deeper. Let's have a look at the liquidations. Current 24-hour liquidations are around 370 million, with 69,179 traders liquidated. We typically get around 500 million on an average day. So that's what I would call pretty subpar in terms of liquidations. Over the past hour, 82% of liquidations were long. Let's have a drill down into the last 15 minutes. Yep, we can see that some big liquidations have occurred here, but not really big in the overall sense. This is really light liquidation value. Light liquidation means that the price movement downwards is not really that significant. What we always want to do is to try to triangulate as much data as we can. This particular graph shows a lot of losses inside the crypto market when that reduction occurred down here. These general spikes in red tend to warrant a thing called capitulation, which is basically hammering out a bottom. Large interests tend to put a lot of money into stable coins on all exchanges, Tether being the largest of them. When these balances go up like this, it is generally to fund crypto assets, which is very positive for the market. Let's have a look at the Bitcoin stablecoin supply ratio oscillator, SSR. When it comes down like this, you see this kick up here. It means stable coins are being used to buy crypto. That's really good. When we have these lows, you can see this low, that's really at capitulation. You can see this low. What comes after it is generally a positive movement in price, and we can see strength being restored. into the crypto market. If you think about Bitcoin, if you didn't know this contextual information, you could easily sell. Personally, I would be buying right now. As part of our trading journal together, we always go through the tops. So Bitcoin, Ethereum, Tether, Binance Coin, Cardano, DOGE, and XRP take out the top 7. Let's see who has done the best in the last 24 hours. Maker, XDC, Compound, HBAR, Engine, Aave, and Sia Coin. Remember, in the last episode we drew our Compound on a technical level. Quite interesting stuff. Let's go the other way. Largest 24-hour percent losses: UMA, Waves, Ethereum Classic, Nexo, Celo, Qtum, and Quant. Let's have a look at the 7-day greatest gainers. XDC, Compound, Decred, ETC, Celo, ICP, and SHIB. Let's go the other way. Greatest losses, 7 days: T-Fuel, Nexo, The Graph, Clayton, AMP, Phantom, and Nia. I had a couple of people reach out to me and ask how to interpret these thumbnails. I'd really love to do a separate video on that. That's a really cool thing to do. If you've been watching for a while, you know a lot of the rules are about developing your own personal edge. It's really important to see a little bit more quickly than other people do, especially in crypto, which can move around so quickly. I use Binance derivatives. I track the percentage change in the contract for the past 24 hours, and I'll go through that. Trading volume and open interest. 24-hour trading volume was 62.7 billion. 24-hour open interest was 5.7 billion. When I look at these percentages, I'm looking at relativities. For example, Bitcoin down 5, Ethereum down about 2. Ethereum is stronger at the moment than Bitcoin. That can tell us a lot about the health of the market. Going down, I'm looking at what is decreasing the most or increasing. Aave has positive price pressure. Not much, but it's there. If we look down further, STMX, which has had positive price pressure for quite a few episodes, and Maker, here, MKR, they've both been doing well. And you will notice this, when something has positive price pressure, it can stay like that for quite a few days. Engine also. Let's have a look. CTK is another one. You just get a feel, as you watch these episodes, you'll really start to see patterns. That's why I include this, because I want you to be a financial blessing to yourself and especially those you love. It just makes your life such a beautiful thing. I'd like to share a rule with you, Rule 99. Now, these rules were developed by me over years and years of practical hands-on trading in the markets, doing thousands and thousands of trades, analyzing them, understanding my motivations, what worked, what didn't work. I have found that for me, one of my personal edges is to buy negative news. News is often put there by people that can pay for it, namely institutions. When institutions put negative news in, I always feel really confident and comfortable that I'm buying at a discount. It's like going into a particular shop and buying that favorite thing at 20% off or 10% off. And the more the discount, the happier I get. You'll see this playing out a lot. I will help you with all sorts of different rules. I think the most important thing to understand is that these rules need a lot of explanation. I could give you a list, but it really wouldn't help you. You need to have them explained and contextualized by the actual price movement of the day. That's what I attempt to try to do. Many people reached out wanting to know how I drew structural resistance and structural support because they wanted to improve their charts and understand what was going on. I put episode 93 together for you as a community, and I focused on T-Fuel because we didn't actually analyze T-Fuel. I thought it would be a really interesting thing to go very slowly, step by step by step, through the process. A lot of people have found it really helpful. If you've watched it, it's always a good thing to go back and revisit. You'll see new things. If you haven't seen it, I would really urge you have a look at it. It could be very, very helpful for you. In the last episode, we did an analysis on Compound because Compound was doing really well. It was one of the top percentage gainers. And I thought, yeah, well, let's share that knowledge and see what we can do. Remember that it was a top percentage gainer. It just crossed this line of resistance. It was sparking up and it was looking very, very exciting. It hadn't made this down leg yet. And what I was suggesting to people is that they buy in layers. Layering your buys means you can buy a certain amount at the current price because you don't want to feel like you're missing out. Then you can buy a level down, a level down, a level down, a level down, always trying to buy at or around support or in between support. And I also mentioned that my favorite thing is to scoop up tails. A tail is something like when price shoots down but then retraces very quickly. It is an incredibly profitable trading strategy. And it doesn't matter if you're trading or investing. If you do things like this, you'll find that you are incredibly profitable, whereas potentially, if not, you could be at a loss. I'll just show you this. So, if you had have bought, say for example, at market, and you had to put, say, $1,000 and you just bought up there, what you can see is the price has come down over 10%. So you would have lost over $100. This is a really good thing to understand. Price is always moving in a wave. It's always going up and down, up and down. You want to take advantage of the downs. You don't ever care. If you miss it, it will come back. Don't chase it. Be very zen-like. Just chill and say, I know price is moving in a wave. You can just move your support levels up if you wish. There's a lot of techniques and different ways of doing this. I look forward to sharing all those with you. Compound is currently trading at 324.76, resistance above at 349.14, and support below at 290.20. A really key thing to bear in mind is Comp has structural resistance around the $400 mark, which also is a level of psychological resistance. When a particular coin comes up to structural resistance, that resistance is typically sold, and it means that there is negative price pressure that will tend to push it down. I'd love to show you this. It's a really, really cool thing. Comp, I was going to put a little thing together on interpreting depth charts, and I just came across something that I wanted to show you. This is Comp on a 5-second chart. I'm going to overlay the price of Bitcoin. I'm going to change it to a 1-second chart. You can keep your eye over on this depth chart as well. I'll just play this for you. Now the interesting thing here, when I overlay, look, in 5 seconds, this is the price of Bitcoin. Look at it. It is overlaid perfectly. Even when we go down to 1 second, look how closely it correlates. It is astounding. People just can't believe this, but it's a fact. If you know this, Comp was pretty much the biggest percentage gainer over 24 hours when we analyzed it. If the largest 24-hour gainer suffers from Bitcoin's gravity, all of them do. It's really helpful for you to see that. Let's have a quick look at total market cap. So total is coming in at 3.58 trillion. It's at a good level of support, and we really don't mind about this retracement. We're totally expecting some sort of low, higher low, higher low around this area. It's no drama whatsoever. Let's have a look at Ethereum. Ethereum currently trading at 21.15, pretty much at the support. It's got this up channel of support, which should hold it reasonably well. It has support at 2020, and that's no problem because remember the gearing of Bitcoin. All we need to do is look at Bitcoin's pattern and see what's happening there. It has also a level of support at 1960 and a structural level of support at 1909. Going the other way, it has resistance at 2178 and 2304. When you're analyzing your alts, it's always good to understand Bitcoin's fingerprint. Like, how is it actually moving around? This is almost like an S at the moment, or a lightning bolt. Let me know what you think that thing looks like. It's always cool to talk about that. Let's cross across to Binance Coin, BNB. BNB is currently trading at 286 or 285.85. Notice this lightning bolt. Or this S, or whatever you would like to call it. Always remember that you're an artist. You can call it whatever you want, so long as it helps you to be consistent and helps you to understand, more importantly. BNB has support below at 278 and structural support at 264.75. It has resistance at the $300 psychological level, but the real resistance is around 309 and 318. Just take note of this structural resistance around the 350 mark. Let's have a look at ADA, Cardano. Cardano is currently trading at 131.49. It's a little bit above support at 128.48. Just take note that there's two good structural support levels below that at 124.11 and 121.27. Resistance above at 133.43 and 140.06. I'd like to introduce you to Rule 21. Follow price, not news. This was a very expensive rule for me, horribly expensive. I used to understand and follow every news source, read every article, you name it, I was on top of it. But you know what? It cost me so much money. I found that the news constantly misled, constantly was in conflict with itself from one day to the next. One day regulation would be the cause of prices going up because it showed a maturing market. The next day regulation was the cause of the price going down. They just couldn't make up their mind what was going on. They were just writing sensationalistic stories to get advertisers to get money, basically. This is a really, really important rule. All of these rules have cost me a lot in terms of trading losses and time and effort to understand. I share them with you because I want you to be a financial blessing to yourself and those you love. The best way to do that is try to avoid as many losses as you can. They're unavoidable, and that's also a trading rule, but minimizing them is really good common sense. I hope this one helps. When I look at Dogecoin compared to Bitcoin's fingerprint, you see this spike? That's really good. That is actually showing strength. You see how it backed off? There's a level of resistance above it, and it's paying attention to these things. It needs to accumulate on top of this resistance that's been turned into support. Doge could be really interesting to watch. Doge is currently trading at 24.973. There is support below at 23.393 and 22.200. You can see that it stayed above these two support levels quite well. It's quite strong at the moment. There is a resistance above at 25.735 and above that at 26.874. Polkadot really has my interest at the moment. I can see that it's sold off. It's doing the lightning bolt or the S, which is fair. That's what Bitcoin is doing. We know even on a 1 second chart, Bitcoin's fingerprint plays out on the strongest of alts. DOT is currently trading at 15,314. I'm expecting that DOT will seek to fill this gap when Bitcoin starts to repair, and it could fill it very quickly, like this kind of quickly. I'm personally interested in DOT at the moment. It's also a top coin. The reason that I have a very standard process of going through the top coins with you is that it's so important to guard you. Top coins generally do so. The lower coins can be very, very volatile and swing tremendously. That's good at the right time. At the moment, the market is a little bit undecided which way it's going. A lot of people are very fearful, and that could cause weak hands to basically shed their crypto holdings. We know that that's not the case technically. Everything indicates that the market is strong and institutions are coming in and buying. There's a lot of buying activity under the hood that a lot of people will miss. Getting back to DOT 15,313 roughly at the moment. It has this good support underneath it. It could very well hit 14,748. If it does so, we're just looking at Bitcoin, what Bitcoin does. There is another level of support below that at 14,023. Resistance above at 16,441 and 17,297. I would have liked to have taken you through far more coins. Unfortunately, I'm really tired tonight. I think I've had so many 1 a.m. mornings and early starts that I'm getting a little bit tired. So I think just for the sake of recharging the batteries a bit, it's probably a good idea to just leave it here. I hope this content has been useful. Everything I do for you is free. Please be aware of scammers. I do these videos to assist you to be more of a financial blessing to yourself and those you love. Please say hi and let me know where you're viewing from, and if you have any questions. Our community is really helpful and supportive. They're a wonderful, wonderful group of people. Reach out and say hi. I always do my best to respond to. If you would like twice daily updates 7 days a week on price movements in the crypto market, please subscribe to YouTube and follow me on Twitter. Crypto is volatile. Always prepare yourself for the best and the worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.